Welcome back to Out of the Rough. I'm here with Jerry Citarella. Jerry Citarella wrote the book, The Truth Helps, but if you don't read it, the truth could hurt.
It could hurt you.
Yes. I want to talk about, in this section, life insurance. Very important part of my financial planning is I have 4 children and a beautiful wife, and I want to make sure that if, God forbid, something happens to me, I've addressed that issue.
Right.
So my wife can make decisions not based on finances, but based on what's best for our family.
Yeah, and make those decisions with the time necessary to make them properly as well.
Right. So let's go deeper into that because there's so many different aspects of life insurance. There's term insurance, there's permanent insurance, there's, help me through this because there is so much.
Well, you know, and you've, nothing personal, it's common, you've just gotten ahead of yourself.
Right.
Because you're already trying to decide which type of insurance before you decide how much.
Okay.
And I think the mistake people make is they get so distracted. We call it heading off on rabbit trails. They get so distracted heading off on rabbit trails, they get off the path. And the path, first path in determining insurance needs is how much do you need? And that can become a difficult thing because there's so many formulas that you can do that. I don't know if we're going to get into that today, but really how much is it? And I get so many people that say, well, I have it through work, I'm good. Or, oh, we have a couple $100,000, we're fine. Well, if you have 4 children and a beautiful wife, even if she's not beautiful, you still have to take care of her.
Yes.
But if you have a family you need to take care of, and you have a couple $100,000 on your own, and then you have maybe twice your salary through work, so maybe $180,000 there or something, that's $380,000. I mean, if you really think about $380,000, how long will that last taking care of your family and all of their needs? And that it's a short amount of time. So I think the first problem people have is they underestimate the need because they don't do proper calculations.
Well, wait, you just said $380,000.
That sounds like a big number.
As a mortgage professional, for 30 years, that's $2,000 a month. I'm hoping you're making more than $2,000 a month at 4% return on your money.
Right.
You know, that's not a whole lot of money.
No, not at all. And you know, what I always tell people is if you have a family, just start at $1 million. I mean, it's pretty much that simple. And because life insurance is so inexpensive, if you're doing planning at the proper time in your life, which is when you first need it, and you have reasonable health, we talked a little while ago about how cheap it is to get started. You don't need a lot of money. There's some policies out there, the term insurance policies you were discussing, which you can get started for $15 or $20 a month.
Right.
So if you have a need, if your family has a need and you care about them, you can't discount what's needed. You can't plan that part quickly. And that part has to be planned before anything else. People take $100 and they say, hey, what can I do with this? And they go try to find a stock or a mutual fund or something to do with it. No. The first thing is to get the foundation built and make sure that the family that you've created is protected.
Right, and there's nothing more secure when I go to bed at night knowing that my family's protected both in our home and financially. And I know the reality of it is something could happen, accidents happen.
Yeah.
And I want to make sure that legacy continues and my children can go to college and do the many things that I would normally be there for them. So, and also insurance for your spouse.
Oh, no question.
If something happens to my wife, what a full-time job.
Yeah.
She does a lot of work at home.
Yeah, no, I don't discount what. But my wife's a housewife, and by no means would I want that job. And a lot of people.
Well, be careful if you call her a housewife, because she's like
a
an
homemaker.
engineer.
She's a domestic engineer. Yeah, she's a domestic goddess.
But it's critical because they're doing so many things. They're the taxi driver. They do the laundry. They clean. They're the tutor. They do the homework.
Right. They're psychologist.
Yes. To us, we come home with our challenges at work.
Yeah.
So there's so much that they do that we would have to be home more with the family, more home with the kids, and our income could drop.
Right.
Important thing to think about.
Yeah, and again, that's an issue I see a lot. Well, my wife doesn't work. I don't need any insurance on her. And and I'll tell you, there are formulas we can use to figure this stuff out, by all means, but really have to take into consideration just simply what would it take monetarily to replace the tasks that the other person is doing.
Right.
And you can monetize those. It's very simple. What would it cost to hire a full-time nanny? What would it cost to hire tutors? What would it cost to hire someone to clean the house? What would it cost to all the things we talked about? And you can monetize those completely. And then how many years would I need that? And that's where it gets a little more difficult. We put an economic factor on it, and we do some interest rates and do some calculations with inflation built in, and that's where a good planner is needed. But to get that starting point is really figuring out what the needs are, what they'll cost, and what it takes to replace them.
Part of it is being willing and deciding that you're going to have this conversation, that it's okay to talk about the fact that something could happen.
It's a tough subject.
And that is, I think, the first step. Let's break it down now into the different types of insurance, just briefly.
Different typs. The two types are, and they get confused quite a bit. Two types are term and permanent. or as we call them, term and perm. Permanent is often described as whole life, and whole life in reality is one type of permanent.
Okay.
So term is simple. It's like renting insurance. You're going to have it for a certain period of time, a term, and it could be 1, 5, 10, 20, 30 years. It could be decreasing where it actually gets lower each year. We attach those to mortgages sometimes. If you're planning on staying in your mortgage,
right,
why not have your need coverage decrease as your need decreases? And then there's permanent insurance. Permanent insurance is designed to be around when it's needed. So how long? Until it's needed. So the question I always ask everybody is, will you need insurance in 21 years? Because typically people get a 20-year term insurance policy. That's the one that's used the most.
Now typically people will say, yeah, 20 years, my last child will be out of school, but then there's so many other financial planning around accessing money when you're retired, because some of these plans, they build cash value.
They do, and just because your kid's out of school doesn't mean that your wife still doesn't have a need, because you're in the mortgage business. How many people actually ever pay off a mortgage?
Very few.
Very few. So you'll probably have a need. And the cash value policies do build up cash value, or the permanent policies do build up cash value, and there are a number of different ways you can do that as well. Some are fixed, some participate in the insurance company's earnings, some participate in the stock market or bond markets. But the important thing to know there is it's an amazing cash accumulation vehicle if used properly. Now that's the key. If used improperly, not so good.
So it's an amazing vehicle to save those dollars for the future. And when you think about your last child graduating from college, let's say, well, helping them for a home or giving them a couple bucks for that, being able to travel to go visit them. One thing I hope to do as a grandfather or as a father is to go help my son when he's 35, my daughter when they have kids, and be able to make those trips and be able to help them in some fashion, because life is so challenging as it is with so many things going on. It would be nice to be able to lend a hand.
Or even using the money to help them get through college, because some of the college plans, if they don't go to school, there's penalties.
Right.
And the insurance, you can just transfer the need somewhere else.
Yeah, I like it. I like it. Jerry Citarella, the truth helps.
Yep.
And if you don't learn it, the truth will hurt.
It can indeed.
Yes, thank you very much. How do those watching this get a hold of you?
They can reach me at 661-255-9555, extension 11, or one of my websites, infinitygoals.com.
Infinitygoals.com.
Or for the book, it's thetruthhelpsyou.com, and that's all spelled out.
Thetruthhelpsyou.com. Get a copy of the book. It's excellent. I enjoyed reading it, and it's not too bad of a read.
No, it's
the first step.
It was designed to be something you can read on a plane and then tell all your friends about when you get there.
Yeah, love it, love it. Thank you for coming in.
Thank you, Fred.
We're going to jump to a quick break, but when we come back, we have Michael Crane from Smart Business Evolution. We're going to talk about smart sales strategies, how to build a relationship with that customer you're trying to connect with.